Welcome to Stock Spotlight. I'm Michael, your guide to the stock market. In each episode, we analyze companies that have earned a watch or buy rating on my 33-question research checklist. Today, we're shining the spotlight on Autodesk Inc., ticker symbol ADSK, and uncovering what makes it an intriguing investment opportunity. Join me as we explore the insights and strategies that empower savvy investors like you to make informed decisions. Let's dive in. My 33-question checklist evaluates companies across 9 categories, including fundamentals, management quality, industry position, momentum, historical and future growth, capital allocation, capital structure, and valuation. By doing so, we aim to gain a holistic understanding of a company's strengths, weaknesses, and potential as an investment opportunity. As of November 27th, 2024, I have screened 202 stocks across 9 sectors with a mean quality score of 58%, a standard deviation of 15%, and a top quartile benchmark of 70%. 26% of companies analyzed have passed, 59% have scored a watch, and 15% have failed. Check me out on X at Invest091 for the latest companies that I have screened. In terms of company size distribution, 81% of the companies that I've screened are large caps with a market cap of $10 billion or more. 18% are mid caps, which is a market cap of $2 to $10 billion. And 1% are small caps, which is $250 million to $2 billion. The top 5 sectors screened are consumer discretionary at 20%, information technology at 18%, industrials at 17%, healthcare 12%, and consumer staples at 9%. I evaluated Autodesk in May of 2023, but the data used for this podcast episode is as of the recently reported Q3 25 quarter. They scored a quality score of 73%, which was good enough for the 84th percentile, and a pass rating. I also like to look at Schwab and Guru Focus as other benchmarks. Schwab gives them a C rating, and Guru Focus gives them a 90, which is the 60th percentile in my database. Okay, so I will first start with an overview of their business and industry. They are in the software, system, and application industry within the larger information technology sector. And as of November 27th, 2024, they have a market cap of $62.7 billion, which would classify them as a large cap. They're actually down about 8% on the day after reporting earnings yesterday. Next, let's talk about their business background and what they sell. So Autodesk has a really interesting evolution. They were founded in 1982, and I've split their evolution into 4 different periods. The first period is 1982 to the 1990s, and this is when they focused primarily on AutoCAD, which quickly became the industry standard for computer-aided design. And then in the 1990s to 2000s, they expanded into 3D modeling and began acquiring companies to diversify their product portfolio. And then as things transitioned to the 2010s, they started entering new markets like media and entertainment and construction. And then from the 2010s to present time period, they've really shifted to a cloud-based subscription model where they're emphasizing building information modeling or BIM and 3D printing technologies. Overall, Autodesk has successfully transitioned from a single product focus to a comprehensive suite of software solutions across multiple industries, including architecture, engineering, construction, manufacturing, and media and entertainment. Autodesk offers both products and services. In addition to their main software products, they do provide administrative support and maintenance services for their subscription plans. Their key software products include AutoCAD, which is the flagship 2D and 3D computer-aided design software that is still widely used and taught in universities for engineering and architecture programs. Within AutoCAD, they also own DWG technology. This is the native file format for AutoCAD, and it's become an industry standard for CAD software. AutoCAD and AutoCAD LT are within one product family. They also have AutoCAD Civil 3D, which falls into their Architecture, Engineering, and Construction, or AEC segment. This is specialized software for civil engineering design and documentation, and it supports infrastructure projects like roads, bridges, and land development. Next, they have Revit. This is a building information modeling, or BIM, software for architects, engineers, and designers. It allows for collaborative design, documentation, and simulation of buildings. This is also within the AEC segment. There's 3 other products that I will talk about. The first being Inventor. This is 3D mechanical design software for product and machine design, simulation, and engineering. This falls within their manufacturing product family. There's also Fusion, which was formerly Fusion 360. It is a cloud-based platform for product design and manufacturing, also within the manufacturing product family. And then last, Maya. This is professional 3D animation, modeling, simulation, and rendering software used in film, television, and game development. It is the largest product within their media and entertainment product family. I rate their products as a range from discretionary to essential, depending on the user and industry. I think it's essential for large enterprises as their software is integral to their operations. And also tools like AutoCAD and Revit are industry standards and essential for professionals to maintain competitiveness. Also in academic settings, their software is essential for training students. With that said, smaller firms may view some of their products as discretionary expenses, particularly the more specialized tools. But the shift to a subscription model has made their software more accessible, potentially increasing its essentiality for users. So overall, I would rate their products as more essential than discretionary. You might have heard me discuss product families when mentioning their products. This is what they call their business segments. And there are 4 product families, with most of the contributions from revenue being driven by their Architecture, Engineering, and Construction, or AEC, and Manufacturing, or MFG, product families. First, we'll discuss their AEC product family. As of fiscal 24, AEC generated $2.58 billion in revenue, which was 47% of total revenue, 13% year-over-year growth, and 31% year-over-2-year growth. While the 10-K notes that AEC includes the legacy AutoCAD and its more updated version Civil 3D software, as well as its relatively newer Revit, which was not built on AutoCAD, its revenue breakdown actually separates out AutoCAD and its LT version, which implies that the $2.58 billion came solely from Civil 3D and Revit. So while the 10K is a little confusing, at least the revenue breakdown makes more sense. So the second product family that we'll talk about is AutoCAD and AutoCAD LT. This product family generated $1.46 billion as of fiscal 24, which accounted for around 27% of revenue, 5% year-over-year growth, and 18% year-over-2-year growth. This is their oldest product line, and it continues to be a significant contributor to the top line. One thing to note is that these products do get a 4.5-star rating on Gartner and 123 ratings, so it still seems to be well received by those in the industry. The next product family we'll talk about is MFG, or Manufacturing. In fiscal 24, this segment generated $1.06 billion in revenue, which was around 19% of the total revenue, 9% year-over-year growth, and 21% year-over-2-year growth. Most of the growth in this segment can be attributed to Fusion and Inventor. The final product family that we'll discuss is M&E, or Media and Entertainment. This is their smallest segment. It only generated around $295 million in revenue as of fiscal 24, which was around 5% of total revenue, and it experienced 1% year-over-year growth and 14% year-over-2-year growth. One thing that I do like about Autodesk is that their revenue is well distributed across geographic regions, with solid top-line growth the last few years in Americas and Europe. Although the Asia Pacific or APAC region is less critical to the business, it's worth tracking to see if Autodesk can re-accelerate top-line performance. For the Americas, in fiscal 24, this geography generated $2.44 billion in revenue, which accounted for 44% of the total, 17% year-over-year growth, and 38% year-over-two-year growth, with significant contributions from both the US and other Americas. For EMEA, this region generated $2.04 billion in revenue as of fiscal 24, which was around 37% of total, 7% year-over-year growth, and 20% year-over-two-year growth. APAC generated $1.02 billion in revenue as of fiscal 24, which is around 18% of total, 1% year-over-year growth, and 10% year-over-two-year growth. This region has seen slower growth compared to the Americas and EMEA, but still remains important for the long-term growth of the business. From a seasonality perspective, historically, Autodesk has had increased enterprise business agreement, or EBA, sale activity in the fourth quarter. This seasonality may not have an immediate impact on their revenue since they recognize subscription revenue over the term of the contract. Their 10-K does note that this seasonality may affect the relative value of their billings and remaining performance obligations in the fourth and first fiscal quarters. Let's now discuss their customer base and market dynamics. Autodesk's customer base is diversified across multiple industries, including architecture, engineering, construction, manufacturing, and media and entertainment. The end consumers range from large enterprises and government agencies to small businesses and individual professionals. This broad customer spectrum allows Autodesk to mitigate concentration risk. And Autodesk operates in a generally attractive industry characterized by ongoing technological advancements with Gen AI and a growing reliance on software solutions for design and engineering tasks. Despite intense rivalry in the competitive CAD software market, Autodesk maintains a strong market position through its established reputation, innovative products, and customer loyalty. First, let's discuss an industry profile for both CAD software and BIM software, which is where they mostly compete. The current size of the CAD software industry is approximately $10.8 billion in 2023, and it's expected to grow at a CAGR of 6%, reaching around $20 billion by 2023. The sources I used for this were Epson and 6 Sense. The BIM software industry has a current size of approximately $8 billion in 2024 and is expected to grow at a CAGR of around 13%, potentially reaching around $15 billion by 2033. Autodesk is currently at around $6 billion in trailing 12-month revenue as of Q3 25. About $2.8 billion of that is AEC, which is Revit and Civil 3D, and another $1.5 billion of that is AutoCAD. So just doing a back-of-the-envelope market share, Revit and Civil 3D have a market share of around 35%, and AutoCAD has a market share of around 15%. According to investorsgrow.com, which I use for my DCF, they have analyst estimates at 12% average revenue growth for Autodesk for the next 3 years, which is right around that BIM software industry growth rate and higher than the CAD software industry growth rate. So this is nice to see. In terms of the competitive environment, Autodesk faces competition from major players such as Bentley Systems, which is ticker symbol BSY. They generate around $1.4 billion in revenue, and Dassault Systems, ticker symbol DSY, which is in France. They generate around $5.6 billion in revenue, and PTC, which generates around $2 billion in revenue. I next looked at a comparably comparison. So Autodesk leads its competitors in both customer loyalty and net promoter score, with the highest percentages in both categories, indicating strong customer satisfaction and loyalty versus some of their major competitors. I also included Adobe since they are both software behemoths. For Autodesk, they have an 82% customer loyalty score and an NPS of plus 32. Next, Ansys, ANSYS. They have an 81% customer loyalty score and an NPS of 23. PTC has a customer loyalty score of 81% and an NPS of plus 20. Dassault Systems has an 81% customer loyalty score and an NPS of plus 11. Adobe has a 77% customer loyalty score and an NPS of plus 26. And lastly, Bentley Systems has a 74% customer loyalty score and an NPS of plus 18. So the range within this group is a customer loyalty rating of anywhere between 74% and 82%, while NPS ranges a little bit more from a low of plus 11 Dassault Systems to a high of Autodesk at plus 32. Overall, Autodesk does very well on this third-party comparability comparison. The last part we'll discuss for this section is a quick Porter's 5 forces analysis. For industry rivalry, I have this as high. I believe competition among established players in the CAD space is intense, with Autodesk and its competitors primarily competing on product features, integration capabilities, and customer support. The rivalry is further heightened by the need for continuous innovation and differentiation in a rapidly evolving market, especially with generative AI. For buyer power, I have this as moderate because customers can choose between various software solutions, but Autodesk's established reputation and data migration challenges does provide some leverage in switching cost. Supplier power I have as low, as Autodesk primarily relies on its proprietary technology and services. Threat of new entrants is moderate. While barriers exist due to brand loyalty and established user bases, technological advancements can lower entry barriers in the software industry. And then for threat of substitutes, this is also moderate. Alternative design tools are available, but may lack the comprehensive features offered by Autodesk. So overall, from a Porter's 5 forces analysis, potentially the only real concerning thing is the industry rivalry, but outside of that, the industry scores quite well and is pretty attractive. I will now examine their revenue generation and recognition, marketing strategies, product development, pricing power, and key financial metrics. Autodesk generates revenue primarily through subscription-based offerings, which is recurring in nature, and almost 100% of total revenue. In 2016, Autodesk shifted to the subscription model from a product sell model when customers would purchase copies of its product for the right to use in perpetuity. Since shifting to a subscription model, Autodesk earns annual revenues by requiring customers to pay for the right to use the product every year. However, annual subscriptions are priced lower than the one-time cost model of past. The change was finalized in 2020. It's worth noting that Autodesk offers a flex plan that allows users to purchase tokens for on-demand access at a starting price of $300 for 100 tokens, which is equivalent to 10 days of use. In terms of revenue recognition, for product subscriptions and cloud service offerings, revenue is recognized ratably over the contract term as the customer simultaneously receives and consumes the benefits. There's also a couple different revenue categories. They split revenue into subscription and maintenance revenue. Subscription was $5.1 billion in fiscal 24, which was 93% of total revenue and 10% growth year over year. This includes cloud-based subscriptions, cloud service offerings, and enterprise business agreements, or EBAs. Maintenance was $54 million, which was a slight decline from 2023 at $65 million, but is only 1% of total revenue. There's also an other services that is around 6% of total revenue. A few key revenue drivers to look out for is recurring revenue, which is the percent of revenue that is subscription-based, deferred revenue, which is payments received for services not yet delivered, client retention rates, product innovation, and foreign exchange rates, because Autodesk does have global operations. For marketing, Autodesk promotes its products through a combination of direct sales to enterprise customers and an extensive network of approximately 1,400 resellers and distributors. The company has introduced a new transaction model that allows channel partners to provide quotes while transactions occur directly between Autodesk and the customer. This is meant to enhance customer control and streamline the purchasing process. In terms of pricing power, I rate this as moderate to strong for Autodesk, as their established reputation and the critical integration of its products into customer workflows does provide significant leverage for pricing. The company has also successfully implemented price increases averaging around 5.7% since 2019. This was in an online article that I found. And Revit subscriptions cost approximately $3,000 annually, which reflects the value customers place on these essential tools despite some competitive pressures. I also rate demand as relatively inelastic. While clients may have the option to defer purchases or explore alternatives, the specialized nature of Autodesk offerings means that many users would find it challenging to operate efficiently without them. As highlighted in the CEO's 2020 Autodesk and the Architecture Industry blog post, the cost of their software is a small percentage of overall project budgets, averaging less than 1% of revenues for architecture firms. Therefore, despite some price sensitivity in the market, their products maintain a strong position as necessary investments for their users. In terms of innovation and R&D, Autodesk does invest significantly in R&D to create new products and enhance existing ones. Their 10K states that most product development occurs internally across key global locations. In fiscal 2024, they allocated approximately $1.38 billion to R&D, which was about 25% of total revenue. This was actually below the 10-year average of 29%, and after 2019, R&D as a percentage of revenue has started decreasing from the 30 to 40% range to the 20 to 25% range. Notably, Adobe allocated approximately $3.8 billion to R&D as of their last fiscal year, which accounted for about 18% of total revenue, so slightly lower than Autodesk. I'll then look into a few qualitative high-quality attributes for Autodesk. First, I like to see if there's a Morningstar moat rating. Morningstar assigns Autodesk a wide moat rating due to significant switching cost and a strong network effect. They note that the complexity of Autodesk's software products creates high barriers for users to switch to competitors due to the substantial time and training required to achieve proficiency. This entrenched position is further reinforced by their educational initiatives, which provide free licenses to institutions and foster familiarity among future professionals. The other qualitative high-quality attribute that I'd like to discuss with Autodesk that I really like about their business is their customer base. Autodesk has a strong customer base characterized by high revenue retention rates and diversification across various sectors. The company has had a net revenue retention rate within the 100% to 110% range the last few years, which is right where you want it to be for a mature company. And their business's broad reach not only stabilizes revenue streams, but also enhances the company's resilience against sector-specific downturns. We'll now discuss a few quantitative high-quality attributes that I like to run for every company. The first section is returns and predictability. The first question is the annualized price return CAGR greater than the S&P 500 since Portfolio Visualizer tracking began? For Autodesk, this is yes. It is 13.3% versus 9.1%. From June 97 to October 24. Next, are there any EBIT operating losses over the last 10 years? Yes, for Autodesk, they have 2 losses in 2016 and 2017. These losses were primarily due to significant investments in R&D, some restructuring efforts, and the transition to a subscription-based revenue model. So we'll give them maybe a slight pass here. Next, is Guru Focus predictability at least a 4 out of 5? No, Autodesk has a predictability rating of 1 out of 5. This low rating suggests that their revenue and EBITDA per share have exhibited considerable historical volatility, making it difficult to forecast future performance reliably. I do anticipate this predictability rating to improve in the future with the recurring nature of their subscription model. Next is 10-year stock-based compensation adjusted free cash flow linearity at least 0.75. No, the normalized 8-year SBC adjusted free cash flow linearity is about 0.38, which is well below my target of 0.75. I removed the 2017 to 18 time periods since adjusted free cash flow was actually negative. Still, this is below my target. Next, margins. Is the 10-year average gross margin at least 40%? Yes, the 10-year average is actually 91.9%, which is significantly higher than my 40% benchmark. I knew Autodesk would be high, but I was surprised it was this high. Next is the 10-year average SBC adjusted free cash flow margin at least 15%. Yes, the 8-year normalized average, which excluding 2017 and 18 again, is 17.7%, which is slightly higher than my 15% benchmark. I'd then like to ask 3 quality growth questions. Is 10-year revenue CAGR at least 5%? Yes, it's 9.03%, which is greater than the benchmark. Then, is the 10-year free cash flow per share CAGR at least 10%? Fortunately for Autodesk, this is no. It's actually only 9.01%, which is slightly below that double-digit benchmark and also their revenue growth rate. To round out this section, is 10-year average free cash flow conversion at least 100%? So this equation is free cash flow per share divided by diluted earnings per share. And if you only consider years with valid conversions, so excluding 2016 to 2018 and 2020, then the average free cash flow conversion ratio is actually 295%, which is significantly greater than the 100% and a yes. To round out my review of quantitative high-quality attributes, we'll discuss a couple of questions around high returns. The first question is 10-year average ROIC at least 20% and ideally higher than the 2023 industry average? For Autodesk, this is no. On stockanalysis.com, 10-year average ROIC is only 4.8% with an 11% standard deviation, while quickfs.net has a 2.4% average ROIC and a 23% standard deviation, which is very high. The 2023 software industry average ROIC is 23% in the NYU database. Next, I want to see if ROIC is consistently greater than the WACC or cost of capital, and ideally trending up if low or holding steady if high. For Autodesk, the WACC has actually been higher than the ROIC for 4 of the last 5 years on Guru Focus, but it has been trending up since 2019. So this question doesn't get a full yes, but the trend up is worth noting and something to follow moving forward. Now let's dive into the financial landscape of Autodesk by exploring the key highlights from their 3 financial statements. First, the income statement. So I like to look at operating expenses to start out, and there's really 3 categories of operating expenses to know about Autodesk. First, marketing and sales, and this is between 33 and 37% of revenue the last 3 years with a decreasing trend, and it is the largest expense. The second largest expense is research and development. I've already discussed this a little bit above, but it's around 25% of revenue and has been relatively stable as a percentage the last 3 years. The third largest expense is general and administrative. It's between 10 and 13% of revenue and has been relatively steady the last few years as well. I'd then like to go into net financing cost, which is the difference between interest expense and interest income. So Autodesk's net financing costs have dropped from around 23% of net income in 2020 to actually generating income in 2024. So this shift from interest expense to interest income suggests that Autodesk is now earning more from its cash reserves than it's paying in debt interest. I'd then like to look at interest coverage to see how well they can cover their debt payments through operating income. Similar to net financing cost, their interest coverage ratio has shown a strong upward trend the last few years, improving from 6.4 in 2020 to 14 in 2023, and ideally I like at least 10. The trend culminates in 2024, where Autodesk's interest coverage ratio becomes incalculable as the company shifted from paying interest to earning interest income. We'll now discuss a little bit of the balance sheet. First, I'd like to discuss the top assets and liabilities. Their top 2 assets are goodwill and cash equivalents. For goodwill, this was around $3.7 billion as of the last fiscal year, which is about 37% of total assets. This suggests significant acquisition activity, and it's above my 30% threshold and also above the 2023 industry average of 29%. It has declined about 3% since 2020, but still remains very high. So this is kind of something I don't really like to see. For cash and cash equivalents, this is around $1.9 billion and 19% of total assets, and it suggests a strong cash position for Autodesk. Their top 2 liabilities are deferred revenue current and long-term notes payable. Current deferred revenue is around $3.5 billion or 35% of total liabilities. This is typical for their business model and also explains why current assets don't cover current liabilities and they have a negative working capital position. For long-term notes payable, this is around $2.3 billion and 23% of total liabilities. While significant, it's not excessive given their cash position. I then like to look into their capital structure. First, the latest quarter trailing 12-month debt to equity ratio. This ratio is 1.05 and is actually the lowest positive ratio that Autodesk has had in the last 5 years, and indicates that Autodesk has strengthened its capital structure by reducing reliance on debt relative to equity. The consistent downward trend from 3.61 in 2022 to 1.05 in the trailing 12-month period suggests a deliberate strategy to improve their financial leverage position. I then like to look into their latest quarter cash to debt ratio. While they're not in a net cash position, which is what I ideally like to see, their trailing 12-month cash to debt ratio remains consistent with the 2024 figure at 0.72. The trend the last few years shows a stabilization of the cash to debt ratio around 0.72 to 0.73, which is a significant improvement from the lower ratio seen in earlier years. The last part of analyzing their capital structure is looking at their debt schedule. The majority of Autodesk's debt obligations, around 60%, are actually due after 2030, with only a small portion, around 2.6%, due in the next fiscal year, indicating a well-structured debt schedule with minimal near-term refinancing pressure. The last part of the balance sheet that I like to take a look at is shareholders' equity. Their shareholder equity position has some positive aspects, as there is no preferred stock, which does simplify the capital structure. And while retained earnings remain negative, they are moving in a positive direction, having decreased by $282 million over the past year. Their aggressive share repurchase program has significantly contributed to this negative retained earnings position in recent years. However, the recent moderation in buybacks, combined with the improvement in retained earnings, suggests that they may be balancing these priorities more carefully now. We'll then discuss the cash flow statement, and there's really 3 metrics that I like to look at here. First is stock-based compensation intensity. Over the past decade, Autodesk's SBC as a percentage of revenue has averaged 10.8%, which is above the industry average of 8.7% for 2023, and indicates a consistent commitment to incentivizing employees through equity compensation. This percentage has also increased over time. If you look at SBC as a percentage of operating cash flow, it has averaged a significantly higher 49.2% over the last 10 years, which suggests that a substantial portion of their cash flow is allocated to this expense. I'd then like to look at capital intensity. Overall, Autodesk's capital expenditures averaged 2.1% of revenue over the last decade, which is well below the industry average of 5.9% and my threshold of around 5%. Which reflects its focus on maintaining an asset-light operational structure while supporting growth through investments in R&D rather than physical assets. Now, I'd like to talk about management to evaluate their leadership structure, compensation practices, and capital allocation strategies. First, a leadership overview. Autodesk is not currently founder-led. The original founder, John Walker, severed ties with the company in 1994 and passed away earlier this year. Their current CEO is Andrew Anagnost, and he has served as CEO since June 2017, giving him a tenure of 7.4 years, which is above the US average of about 4.8 years. His total compensation is $20.7 million, with only 5% of that being base salary, indicating a strong alignment with shareholder interest through performance-based compensation. However, he does hold a relatively low ownership stake of around 0.2% in the company. Andrew can be classified as a long-tenured manager, having extensive experience in the industry and with Autodesk. To round out this section, I'd like to look at Glassdoor metrics, and Autodesk actually scores very well here. They get an 87% recommend to a friend score, which is well above the top quartile in my database, a 95% approval of CEO, and an 83% have positive business outlook rating. In terms of compensation, their compensation philosophy in the 14A emphasizes rewarding long-term stock performance to align executive interest with those of shareholders, which is particularly important given the low insider ownership. The compensation structure includes a significant portion of RSUs and PSUs, which does promote long-term value creation and retention. And there are 4 components. First, base salary, which is around 5% of the CEO's total pay. This is the foundation of their compensation package. There's then an executive incentive plan This is around 7% of the CEO's total pay. It's a short-term top and bottom line growth target based on revenue and non-GAAP income from operations. There's also long-term incentives, which is around 53% of the CEO's total pay. These are the PSUs, enacted to align compensation with key drivers of the business and total shareholder return. These are based on total revenue, free cash flow, which I don't think is SBC adjusted, and total shareholder return over a 1, 2, and 3-year performance period. Ideally, I'd like that longer. Long-term incentives rounds out their compensation structure. This is 35% of the CEO's total pay. These are RSUs enacted to encourage focus on long-term shareholder value creation and retention, and it's based solely on stock price. For capital allocation, Autodesk actually receives an exemplary capital allocation rating from Morningstar due to its strong balance sheet, exceptional investments, and mixed shareholder distributions. They claim that the CEO's focus on the construction market, which is undergoing modernization, is a key factor for the company's investment strategy. While I do agree with the latter, I would not rate them as exemplary for capital allocation, and I'll discuss this in just a second. In terms of uses of cash, Autodesk primarily uses cash for acquisitions and share buybacks with no dividends. While they did repurchase $750 million worth of shares as of the trailing 12-month Q3 25 quarter, they also issued $121 million in common stock during the same period. Their ongoing issuance suggests that buybacks primarily offset dilution rather than strictly enhancing shareholder value. Investors might view this as a sign that Autodesk is not effectively utilizing its cash flow to create additional value. They have $4.6 billion remaining available for repurchases moving forward. Diluted shares outstanding have declined over the last 10 years from 232 million in 2015 to 216 million in 2024. And as we discussed above, this is mostly due to buybacks outweighing issuances. I'd then like to look at shareholder distribution, which is the percentage of buybacks and dividends given out of free cash flow available. And for Autodesk, this is really a story of free cash flow versus adjusted free cash flow. Without adjusting, their 5-year average is 64%, which is very respectable. But once you adjust for stock-based compensation, this percentage actually jumps to 107%. It was even 170% in 2024. For me, I like the percentage below 100% over a long time period. So it depends on whether you believe in adjusting for stock-based compensation or not here. I then want to very quickly evaluate their M&A strategy and any recent notable acquisitions. The metric I like to use for acquisition is called acquisition intensity. And this is acquisitions divided by operating cash flow. For Autodesk, they have a high acquisition intensity ratio, which is anything over 30%, as their 10-year average is actually at 56%. So over the last 10 years, they have exhibited a high reliance on M&A for growth. And then I'd like to ask, have past acquisitions actually been successful? It's hard to tell with Autodesk, and to me, the ones to watch are Innovyze, which is a 2021 acquisition for digital solutions in water infrastructure, and then PayApps, which is a 2024 acquisition for construction project payments. After management, I'd like to briefly discuss Autodesk's ownership structure. In terms of their distribution, insider ownership according to Market Beat is 0.14%, and institutional ownership is 90.24%. So insider ownership is less than the 10% benchmark that I like to see, while institutional ownership is greater than the 75% benchmark that I like to see. I will now evaluate their key growth areas and risk factors. Each element will be assessed based on 2 dimensions: the likelihood of occurrence and its potential impact on the business. The first growth area is generative AI. I rate this as high likelihood and high potential impact. Their CEO recently highlighted their leadership in generative design and 3D generative AI, which can automate low-value tasks and enhance the speed and quality of complex designs. This technology, integrated with tools like Fusion, positions Autodesk to leverage diverse range of data sets from its market leadership position to give it what I think will be a competitive edge in the 3D modeling space. The second growth area is construction industry innovations. I rate this as high likelihood and high potential impact. As mentioned previously, Autodesk is focusing their innovation work on the construction sector, driven by trends such as modular construction, AI integration, and data utilization. The shift towards more sustainable practices and the adoption of digital technologies are expected to enhance productivity and project efficiency, aligning with industry demands for improved project outcomes. The third growth area that I'd like to discuss is infrastructure development. I rate this as moderate likelihood and a high potential impact. With increased government investment in infrastructure, particularly through initiatives like the Bipartisan Infrastructure Law, Autodesk's technology can streamline workflows and enhance project delivery in this sector. There's 3 risk factors that I'd like to highlight. The first is around their billing and free cash flow uncertainty. I rate this as high likelihood and high potential impact. Their recent transition from multi-year upfront billings to annual billings for most contracts does introduce complexities in cash flow management. Initially, this shift reduces reported billings, deferred revenue, and free cash flow, as unbilled deferred revenue increases on the balance sheet. And the company has acknowledged that this transition creates noise in the financial reporting. The second risk factor is activist investor pressure. I have this as moderate likelihood and moderate to high potential impact. Activist investor Starboard Value has called for a reevaluation of the CEO's leadership and accountability within the management team. This scrutiny could result in strategic shifts or management changes that disrupt operations or impact investor confidence. The third risk factor is any slowdown in building activity. I rate this as moderate likelihood and moderate potential impact. A decline in the Architectural Billing Index indicates soft business conditions within architectural firms, which could negatively affect Autodesk's revenue from construction-related software and services. In September, the ABI reported a score of 45.7, which marked the 12th consecutive month of declining billings. However, new project inquiries showed a score of 51.6, which does suggest potential future activity. Overall, Autodesk exhibits strong growth potential driven by its leadership in generative AI, innovations in construction, and opportunities in infrastructure development. However, risks such as billing and free cash flow uncertainty, activist pressure, and a slowdown in building activity presents moderate to high challenges that could affect the company's financial performance and market position. Next, I want to briefly discuss some key metrics that I would track for Autodesk. The first is net revenue retention rate, or NRR. This metric is crucial for understanding customer loyalty and effectiveness of their subscription model. Their NRR has consistently been between 100 and 110% the past few years. However, the lack of detailed quarterly breakdowns and exact percentages makes it challenging to assess trends accurately, which in my opinion highlights a need for greater transparency in reporting. The second KPI is remaining performance obligations, or RPO. RPO provides key insights into the future revenue that they expect to recognize from their contracts. It includes short-term, long-term, and unbilled deferred revenue, which is revenue that has been contracted but not yet invoiced. As of Q3 25, RPO has grown at a CAGR of around 14% the last 2 years. The third KPI that I would track is the AEC product family revenue. As the largest segment of Autodesk's business, this revenue stream is crucial for assessing top-line growth. Products like Revit and Civil 3D contribute significantly to this product family, and monitoring AEC revenue trends can help investors understand the effectiveness of their strategies in capturing market share within this important industry. The last main section, valuation and technical analysis, will assess Autodesk's intrinsic and relative value using several valuation methods, while also examining key technical indicators for ideal entry ranges. With valuation, Autodesk is currently in the maturity stage of its business lifecycle, which is seen by its established market presence, stable revenue growth, and a focus on optimizing operational efficiency. So given this context, certain valuation methods align better with their current situation. And since 2020, free cash flow estimates have actually been fairly reliable, within around 5%. So we'll start with those valuation methods first. For a DCF, I use investorsgrow.com. If you use a 9% IRR, a 2.5% perpetual growth rate, and 3 years of analyst free cash flow forecast, which is 38 total analysts, their fair value is $156, which is 46% overvalued versus current price of $292 as of November 27th, 2024. This implies a 6.1% IRR. With that said, they have beaten analyst free cash flow estimates every year for the last decade, except in 2018, so it's worth taking that into consideration here too. I'd then like to do a reverse DCF from Stock Investor IQ. They only have trailing 12-month Q2 25 free cash flow per share, but if you use a 9% IRR, a 15 price to free cash flow terminal multiple, which is the historic average for all stocks, Autodesk needs free cash flow per share to grow 22% per year for the next 10 years to justify its current price. This is between their 5-year and 10-year averages, which range from 33% for 5 years to 11% for 10 years. I then like to look at a free cash flow yield, which I get from stock analysis. Their trailing 12-month free cash flow yield as of Q3 25 is 1.91%. And if you actually look at their 2026 projected free cash flow, you get a yield of 2.96%. So on a trailing 12-month basis, free cash flow yield is lower than their 2.53% 10-year average, which would indicate potential overvalue. But if they can hit their 2026 free cash flow target of $2.04 billion in free cash flow, they actually might be slightly undervalued here. I'd then like to just look at two valuation multiples, EV to EBIT and EV to revenue from Guru Focus. Their EV to EBIT is 53.1 as of trailing 12-month Q3 25. This is less than their 57.7 10-year median. Their 10-year median multiple implies a stock price of around $345, which would actually be 8% undervalued historically. For EV to revenue, it is 11.7, which is greater than their 10.6 10-year median. Their 10-year median multiple implies a stock price of $292, or around fairly valued. Overall, the various valuation methods suggest that Autodesk is probably overvalued, anywhere from 10 to 15% above fair value. EV to EBIT is the most optimistic, while DCF is the most pessimistic. And a free cash flow per share growth of 22% for the next 10 years won't be easy for them to achieve. For technical analysis, I like to first look and see if they're on a short-term and long-term price uptrend. This is yes for both. Over the last 5 years, their stock has gained 92% in price versus 91% in price for the S&P 500. And their current price of $321 is above both the 1-year and 5-year 200-day EMAs. Their performance versus the S&P 500 could be considered underwhelming given their business model, which is maybe why Starboard is getting involved. I'd then like to see if the short interest is low, medium, or high. The short percentage of float is 1.14%, which is low and suggests that there is minimal bearish sentiment in the market. When you do a volume analysis, the most significant buying support is between $198 and $215 on the 5-year chart. Overall, Autodesk does meet most of my criteria for a quality growth company. I am optimistic about their updated subscription revenue model, potential value add from generative AI, and innovation in tools like Fusion. But significant risks do remain, including challenges from the transition to annual billings, questionable management capital allocation, and pressure from activist investors. Within this context, I have added Autodesk to my watch list, identifying a potential entry point around the 5-year volume shelf of $200. For those without a full portfolio like mine, which does include around 20 stocks, the $225 to $240 range would be a nice entry point, which represents about a 25 to 30% discount from current levels. And that wraps up today's episode of Stock Spotlight. I hope you found my analysis of Autodesk both insightful and actionable. If you enjoyed today's episode, please subscribe, leave a rating, drop a comment, or take the episode poll. Your feedback helps us improve. For real-time updates and insights, follow me on X at invest091, and join me next on the first day of 2025 when we'll be doing a complete beginner's guide to investing. The next company that we'll review is Evolution Gaming, ticker symbol EVVTY, on February 1st. Until then, keep your investments smart.